Trading Market Technicals morning call video for Tuesday, June 11th. Well, we had a bit of a consolidation day. Markets were very, very quiet. Nominal gains and losses. Really not much going on. Really consolidated for the last two short covering rally, which was to be expected, and I did expect that today. I didn't expect the markets just to run up again another day, which holds well for my bearish thesis in the sense that that the markets could possibly roll over here. Now, what I mean by that is I'm not saying that the markets are going to roll over. I'm not saying that I'm looking to get short the markets right here. I need a trigger. I want the markets to actually start to roll over, get us a reversal candle, and start to take out some pivotal lows. That's when I get short. It's looking for the anticipating the short side. Now, we could easily just break right through here, but we have some interesting developments, and I want to go over this with you before we get into the charts and indicators. Now, most of our indicators I showed you yesterday, I gave you a ton of indicators. Everything holds true as today, so I'm not going to really get into all the indicators. I'm just going to go into a few little things that I wanted to show you why that I think that the markets may be due for a little bit of a pullback, at least in June and maybe a little bit of July before we start to run higher again. So I am looking for a correction before we really start to test the highs. I mean, really start to break out. Now, the markets in the longer term, as you know, they do look really, really good. A lot of our econ numbers coming out stronger than expected. So the market is recovering, no question about it. But that's where Ben Bernanke has his problem. Yields are rising, and he may have to really pull back the reins. And when that happens, we're going to see how true and how strong the markets really are to hold up and weather. Now, of course, the first reaction would be to sell the market. That's the reason why the markets are up this high, because Ben Bernanke is pumping liquidity into the markets. So, one thing I was looking at yesterday is that Russell, and I'm going to get into it, but I just want to do a quick little recap. Russell did play a leadership role yesterday. Russell, definitely held up well, better than and the other two. And the other two sectors, meaning the NASDAQ, the S&P, the Dow, and the transports. So they were just kind of hanging in there while Russell was actually moving up. Now, that also holds 2 points. One, that's great. Russell acts well, better than the other counterpart. Is one of our leaders, and it does show a gauge of risk on, risk off. But also does tell me that when the Russell starts to move and a lot of these small caps move, we're basically at the end of the move higher. Okay, usually that happens. Russell ends up kind of capping that move after Russell moves, then the market starts to move lower. But anyway, a good sign for the bulls anyway in the short term. Now, the other negative, okay, for the bears is what I showed you yesterday. EEM, the emerging markets, China, and copper, they were all lower yesterday. They all moved lower, and I'm going to show that to you in the charts too. So that's telling me that I think that we probably might go a bit higher and then possibly start to sell off in the next few days and weeks to come. Okay, because you just can't ignore copper continually getting hit and hit, no movement. And then China moving lower and emerging markets not rallying with equities, U.S. equities. So that's something that's going to be a real factor. Lastly, most importantly, guys, last night I was up and I was looking at the Bank of Japan rate decision. They failed to deliver another dose of policy decision. Okay, so basically rumor was that they were going to act on more asset purchasing, increase their asset purchasing. They did not. So that is a big cue. Why? Well, when the Bank of Japan intervened with the yen a few months back, I think that was early April, the markets were teetering, and then the markets jumped up even higher. Money came out of Japan, came into our markets, pumped up our markets, and the yen just got decimated. Okay, so when you have an inverse correlated effect, the yen down, U.S. markets up. I told you we're in a worldwide market here, so you can't not watch this. You have to look at this all day. The Nikkei higher, the Japanese yen lower. Okay, now totally different last night. This may be a big game changer, and why I feel even more confident that the markets will be headed lower in the coming days and weeks. The yen is increasing as we speak at new highs right now. Of course, in the overnight session. Okay, while all of the yen pairs are lower, okay, and that is also affecting our equity markets. So our E-mini futures are down 9 handles this morning. So if you don't think that we have a correlation, you think again. So that could be the canary in the coal mine where we might get a little bit of a pullback. And when I see that relationships from the EM, the FXI, and copper, and then I see the yen rolling over, that's a great recipe for lower prices ahead. Now, doesn't mean that it's going to happen right away. Maybe we just get a little sell-off today and we try to rally again and that fails. So we have to monitor price action, but you have to be prepared because when the markets move lower, they leave everybody behind. It moves fast and furious, so you got to really pay attention if you are looking to get short the market, all right? Okay, now, let's go into our charts. We'll run into the chart. There's nothing to show you. Really, nothing has changed because we had an inside day, but I just want to run through some key points here. Okay, so the NYMO, here's our 20, and remember I mentioned I would like to get short right up in this area here, right up in here. I mean, we're only 10 points away, so, I mean, if the market fails here and starts to break down again, I'll look to get short the market for a couple of days as well. So just keep an eye on the NYMO. Bullish percent, SPX, I showed you this yesterday. As you can see, every time we break higher or lower, the markets move higher or lower, and we are now just flatline here. I think this is going to basically do one of these. Up and then fail, up and then fail. So this might not even happen. It just might just break lower again. Okay, so that's something to keep an eye on. Now, the three that I want to show you that I showed you yesterday, copper. Copper was lower, actually recovered, but broke the pennant, broke out a little pennant. Now, I think you're going to see lower price in copper. Just can't deny it. It's going to go lower. At least test the lows here, and then we would need to reevaluate it. So copper lower, China lower. Okay. Doesn't hold well again for equities. Emerging markets can't get a bid, lower. Okay, now we're testing this area here. So if you could see, while we're the relationship from the EM to the SPX just can't happen here. If everything else is selling off, U.S. equities will follow eventually. It's unless they stop and they revert back and they start to rally. But I don't think that's going to happen this time. Okay, now let's go into our charts. Okay. We are still in this downtrend line. We tried to break higher. We are still inside day here. We closed right at the highs from the previous day. If you take a look at the 1624-ish area, a break lower of the 1624 area, the lows from Friday, that's going to be an important factor here, and I think we're going to at least test a 50-day moving average and or at least the lower trend line of 1600, and then again we will reevaluate. Okay, here is the spiders. Spider's a little bit better, but again, guys, 163.15 is going to be a big day today. If we break 163.15 on a closing basis, look to test the 50-day moving average and this lower trend line. Now, we do have some confluence area of support here at 159.60, call it. 160, let's call it 160. Okay, break that and close. Then I think you're going to probably end up testing this area here and possibly even the 200-day moving average. But we'll see. Again, let's take it one step at a time. Here's the 60-minute. Again, just holding here. Really didn't do much at all yesterday. Very, very quiet. Okay, to be expected as well. Now, again, when you trade in these markets and they're very quiet, the best to do is just step aside. Maybe look for one or two trades, and if it's just not there, there's no reason to push it. You don't have to be in it every minute of the day. Cash is a position. We build the accounts up. Okay, daily chart, diamonds. Same thing as you can see here. So we're at certain areas here. Really important to see this market either start to break lower or could break high. So we're at really an inflection point here, and we're going to really just wait. Let the markets come to you and let the markets decide which way it wants to go, and then you react to it. Excuse me. Okay, head and shoulders on the transportation sector. Again, bearish pattern. Holding the line here. We did break back above the neckline, but still bearish here. We're below the 20-day moving average. So this needs to really wake up and either break higher, so it could push the markets higher, excuse me, and or it'll start to fail again, which I think that the possibility of failure is very, very high. And we have the IWMs. As you can see here, IWMs was up on the day, did very well, and took out Monday's high, but now gave us a doji. So we'll see. Low volume as well. So we'll just have to wait and see. Again, there's going to be a waiting game. I think today, tomorrow is going to be really important. And if we start breaking these key support areas, look out below. We're going to have at least a little bit of a movement to the downside. Again, with the Asian markets lower and a yen higher, I think that's going to bode well for lower prices. Goldman. Another great day, broke out higher again, followed through from Friday's gain. I mean, really, really just on fire here, Goldman Sachs. And again, if we start to go higher and you want a long play, go look into the bank sector, go look at the XLF, look at their components, and get the heaviest weighted ones that's up on a day. And these things are on fire right now because the yield keeps running higher. So banks are doing well. So that's something to keep an eye on. Apple had its conference yesterday, and so Apple was up about $4, and soon it was over, boom, rolled right back over again. So again, Apple, I think consolidating here, but it's holding the 50-day moving average. If it breaks the 50, you're going to get back down to this 418, 419 area, no doubt about it. So I wouldn't be trading Apple. Or if anyway, excuse me, I wouldn't be looking to buy Apple in the long term. Let it prove itself, and even then, even if it got to the 470, I think it would fail. I think Apple, nothing news coming out. I've read some of the minutes on the in their annual event that they usually hold every year, and really it was nothing exciting. That's why it sold off, and I think Apple's going to probably test at least the 418. We will reevaluate it maybe into the 400 area, but we'll see. We'll see. But Apple right now not doing what it should be doing. So I'm just stepping aside on Apple at the moment. And the Qs, lastly, is the Qs. As you can see here, weekly chart of Qs, really not doing much anyway. It was yet one day is the first day. But look at what's happening here. Back into this pennant area. So take one step at a time, guys. Today's going to be really interesting. Yesterday was a total non-event. So it's interesting to see what's going to happen in the next day or so with the yen really starting to gain some momentum to the upside. I think it's just going to fuel some selling pressure in the coming days. So take a step aside. Let's see what happens. Today will be interesting, no doubt about it. Have a great day. Use your stops, guys. Should be a volatile June. And I'm excited because we're going to have some good trading opportunities. Have a great day. We'll speak to you tomorrow. Take care.